To this now, markets have largely shrugged off the US's capture of Venezuela's President Nicolas Maduro, with stocks rising and oil prices easing. But some analysts are warning investors may be underestimating the broader geopolitical risks and potential spillover effects across the Americas. To expand on the conversation, I'm joined by Iraj Abedian, Chief Executive of Pan-African Investment and Research Services. A very good morning, a very good afternoon to you, shall I say. Thank you so much for your time. I mean, what do you make of this? I mean, markets barely flinched after America's capture of Venezuela's president. Are investors being rational or perhaps dangerously complacent?
Thank you very much for the opportunity. Compliments of the season to you and to viewers. And I think that there are two dimensions into this from an economic point of view. One is from the price of petrol, what might happen in the short and medium term, and the other one is the instability, uncertainty, and political risk that this event injects into the global economy, which is already full of risk and uncertainty and really troubled zones. From a price of oil point of view, it's a non-issue. The fact is that the past 10 years, the reliance on fossil fuel has declined. Over the past year alone, the price of oil has lost almost 25% of it, from just below $80 per barrel to today's around 57. So from an oil supply demand, the invasion or the arrest of a Venezuelan president is a non-issue in the short term. From a global economy, investor confidence, especially for the emerging economies, it's a different issue altogether. It's not good. It's compounding problems that we have in the Middle East, compounds the problem that we continue to have with Russia-Ukraine war, and so on and so forth.
So you say it's a non-issue on the one aspect. Have investors become desensitized to the geopolitical shocks under the Trump presidency, if we have to look at the two chains of thought?
I think it's not that they are desensitized. They've discounted that in the prices. They know that some sectors are going to be in trouble. Some sectors like oil and energy more broadly are going to be favorable. They've accepted that the price of dollar currency is going to be under pressure, if you like, the foreign value of currencies. And therefore, all those are in the market already. And those risks are factored into the pricing mechanisms as far as currencies are concerned, as long as commodities are concerned. And that's the reality of how the markets operate.
US President Donald Trump has long held an obsession that US oil companies were unfairly evicted from Venezuela. But now a path is open to right those grievous wrongs. How should one interpret the latest developments that we saw turn out at the weekend?
I think there are two issues here as far as President Nicolas Maduro is concerned. One is the issue of his and his predecessors' intentional sidelining of American oil majors from the extraction and distribution of Venezuelan oil, which is the largest or amongst the largest on the globe. The second one is the issues of drug and the fact that Venezuela has been a distribution point for drug into the United States and elsewhere. And of course, it also intermingles with the matters in the Middle East. So I think that's where the issue becomes a lot more complex. And there are currents and undercurrents in this debate. And the United States under Trump has decided to take a completely different, aggressive and unusual and possibly illegal route.
You touched a bit earlier on the impacts of emerging markets. As we take a look at developments here at home, you also touched a little bit on the price of petrol. And we know that at this stage, the rand is at its strongest. As we look at the geopolitical space, where does South Africa fit in terms of the ripple effect of what's happening in Venezuela and the US?
I think my view is that the price of oil is going to be under pressure. Definitely is not going to go up. dollar is under pressure, which means the rand, the value of the rand, foreign exchange value of the rand, is going to be pretty much under the strengthening bias or appreciation bias. Now, with the price of oil going down, with currency appreciating, the imported value of oil or petrol for you and I and for the economy goes down. It's a good thing for our inflation, and if it continues for the next 6 months or so, we will get the Reserve Bank responding to that as inflation stabilizes at a lower rate. And so all of that from South Africa and many other emerging economies who are importers of oil is good news, is advantageous. Of course, in the neighborhood, on the continent, we have also emerging economies like Nigeria, like Ghana, and others who are oil exporters. For them, it's not good news.
Yeah, very well. Thank you so much for speaking to us this afternoon. Iraj Abedian, Chief Executive of Pan-African Investment and Research Services, giving us a scope of the ripple effect and, of course, what the markets are looking like as the geopolitical tensions spill out across other parts. We will, of course, be monitoring all the developments.